is in Tanzania. Authorities there have barred non-citizens from engaging in certain business activities that usually tend to be dominated by small and medium-sized enterprises. Officials say the move is aimed at protecting local entrepreneurs and trying to reshape the country's domestic economic policy. And there's many as 15 sectors, we'll just pick out a handful of them. Wholesale and retail trade, for example, excluding supermarkets and specialized outlets. Mobile money transfers, mobile phone and electronic device repairs, as well as small-scale mining as well. Those are all areas from which individuals effectively have been barred.
In a stunning move, Tanzania just flipped the global trade game on its head. Foreign companies, including US giants, are suddenly blocked from local markets. Local businesses are booming, jobs are skyrocketing, and the nation is asserting control like never before. Could this be the start of a new era in Africa, where countries call the shots and America loses big? Stay tuned.
In a move that has sent shockwaves across global markets, Tanzania has stunned the world by announcing sweeping restrictions on foreign companies operating in its local trade sector. The decision, framed as a bold defense of national sovereignty and local enterprise, has left multinational giants scrambling to recalibrate, while signaling a seismic shift in Africa's economic landscape. For decades, Tanzania has been a quiet player in global trade, a nation rich in natural resources, strategic ports, and a youthful population hungry for opportunity. Yet, in recent years, foreign corporations, especially from the United States, have begun dominating the Tanzanian market. From consumer goods to construction, from retail chains to energy suppliers, foreign companies established a near-ubiquitous presence, often overshadowing local businesses struggling to compete on price and access. But now, the tides have turned. In an unprecedented policy announcement, Tanzania's government declared that only domestic companies would be allowed to operate in specific sectors critical to the national economy. The move was positioned not as isolationism, but as a protective shield for Tanzanian entrepreneurs, a lever to boost employment, and a declaration that the nation would no longer yield its markets to foreign dominance. The immediate reaction from international markets was electric. Stocks of U.S. companies heavily invested in Tanzania plummeted. Trade analysts, speaking from New York to Washington, called it unforeseen and a strategic blow that could ripple far beyond East Africa. Headlines splashed across global media. Tanzania asserts sovereignty. U.S. companies face sudden losses. Africa's trade game changer. At the heart of this drama is Tanzania itself, a nation leveraging its resources and policies to reshape its future. Local entrepreneurs, long marginalized, celebrated what many described as a historic victory. Small-scale manufacturers, wholesalers, and retailers, who had watched their markets shrink under foreign competition, suddenly found themselves with breathing room, access to capital, and government support. Economists predict that this policy could trigger a boom in local production. By restricting foreign dominance, Tanzania has effectively created a domestic incubator for innovation, entrepreneurship, and job creation. The move signals to investors and citizens alike that the country prioritizes its own economy, placing national growth above foreign profits. Yet the drama doesn't end there. Across the Atlantic, U.S. trade bodies scrambled to assess the damage. Multinational companies, which had long relied on Tanzanian markets as a growth engine, are now forced to reconsider their strategies. Supply chains, distribution networks, and long-term contracts are suddenly in jeopardy. The message is clear. Global companies can no longer assume that their historical presence guarantees future access. In the bustling streets of Dar es Salaam, the energy is palpable. Markets once dominated by foreign brands now teem with local alternatives. From agricultural goods to consumer electronics, Tanzanian companies are stepping into spaces long monopolized by international giants. Vendors report surges in sales. Factories, previously underutilized, are ramping up production. Even the nation's ports, vital hubs for trade, are seeing a shift towards supporting domestic exports rather than foreign import-heavy operations. But the implications extend beyond Tanzania's borders. Analysts warn that this could inspire similar moves across Africa, where nations are increasingly asserting control over their economies. Nigeria, Kenya, and Ghana have all been watching closely, calculating whether they might adopt policies that favor local businesses over entrenched foreign players. A domino effect could redefine trade dynamics across the continent, challenging the decades-old dominance of U.S. and European corporations. The U.S., of course, is paying close attention. While some officials frame Tanzania's move as a legitimate effort to strengthen local industries, others labeled it as trade disruption and a setback for American economic interests. Yet, even critics must acknowledge the strategic calculation. Tanzania is sending a signal that it will not be passively shaped by foreign corporations or external pressures. This is national sovereignty in action, a statement that the country's markets, resources, and future are under Tanzanian control. The economic implications are profound. By channeling trade toward domestic businesses, Tanzania is boosting tax revenues, stimulating local investment, and reducing dependency on foreign capital. The multiplier effects are staggering. More jobs, higher wages, increased purchasing power, and a stronger, more resilient economy. In other words, Tanzania isn't just protecting businesses, it's investing in the nation's future. Global reactions have been dramatic. International financial media portray Tanzania as a bold disruptor, challenging the established order of global trade. Economists debate whether this move represents protectionism or enlightened economic nationalism. Trade organizations scramble to issue statements. Investors are left weighing risk versus opportunity, realizing that countries can, and will, assert their own rules on foreign commerce. Meanwhile, local entrepreneurs are thriving. Formerly marginalized companies report unprecedented growth. New industries, from renewable energy to tech startups, are attracting investment that would have otherwise gone to multinational giants. The shift has sparked a wave of optimism across the nation. Citizens see a tangible demonstration of economic sovereignty, the idea that their country is finally prioritizing their prosperity. Tanzania's boldness also reflects a broader trend, emerging markets taking control of their destiny. In decades past, African nations were often at the mercy of global powers and corporations. Now, countries like Tanzania are rewriting the rules, asserting that growth, development, and prosperity will be homegrown. For local leaders, this is more than economic strategy, it's national pride, a reclamation of agency that has been denied for too long. The ripple effects are already evident in neighboring economies. Regional trade agreements are being reassessed. Export-import policies are under review. And multinational companies are facing a stark choice: adapt to local realities, partner with domestic firms, or retreat entirely. It's a high-stakes game, and Tanzania has raised the stakes considerably. Some critics argue that foreign investment brings expertise, technology, and capital. But Tanzania's strategy is calculated. The country is not closing itself off entirely. Foreign partnerships are still welcome, but they must operate under terms that empower local businesses and respect Tanzanian priorities. In other words, it's not about isolation. It's about rebalancing power, ensuring that the benefits of trade accrue first to Tanzanians. The cinematic drama unfolds in every corner of the country. Factories hum with renewed energy. Market stalls bustle with new products. Shipping containers bear the labels of local brands rather than multinational logos. Even the stock market responds, with domestic companies seeing surges as confidence in the national economy grows. Every sector, from agriculture to technology, feels the pulse of a country asserting control over its destiny. Yet the tension remains. International observers are watching for retaliation or trade disputes. Will the U.S. negotiate, escalate, or simply accept Tanzania's bold new path? Will other nations follow suit, sparking a new era of economic nationalism across Africa? The answers remain uncertain, but one thing is clear: Tanzania has reshaped the conversation. At the core, this story is about power, not just economic power, but the power of a nation to define its own future. Tanzania's decision reflects a larger shift in global dynamics. Emerging markets are no longer passive participants in a system dominated by Western corporations. They are active players, shaping policies that protect their interests, uplift their citizens, and challenge the status quo. For local businesses, this is nothing short of transformative. Entrepreneurs are seizing opportunities once denied to them, scaling operations, hiring employees, and innovating products that reflect local needs and culture. Consumers benefit as well. enjoying access to goods and services produced closer to home, with profits reinvested into the domestic economy. It's a virtuous cycle of growth, empowerment, and national pride. Meanwhile, the world watches in awe and apprehension. Analysts continue to debate the long-term consequences, while investors calculate risks and opportunities. Multinationals are forced to rethink their global strategies. Trade policies are re-examined. And through it all, Tanzania stands firm, a nation asserting its right to protect its markets and its people. The drama reaches every corner of the globe. In New York, boardrooms are tense as executives consider the impact. In London, trade organizations analyze the potential ripple effects across Africa. In Dar es Salaam, citizens celebrate a moment of triumph that has immediate, tangible effects on their livelihoods. It is a story of bold leadership, calculated risk, and the reshaping of a nation's destiny. Ultimately, Tanzania's decision is about more than economics. It's a statement about sovereignty, empowerment, and the ability of a country to prioritize its citizens. It is a declaration that foreign influence, while welcome in collaboration, cannot override the needs and aspirations of the local population. It is a bold vision of a self-determined future rooted in national pride and economic independence. As the sun sets over Dar es Salaam, markets still hum, factories still roar, and citizens feel the pulse of a nation that has taken control of its future. Across the world, analysts continue to debate, investors continue to calculate, and multinational corporations continue to strategize. Tanzania has changed the rules of the game, and in doing so, has asserted itself as a rising power in the global economic arena. The story is far from over. Global reactions will evolve, policies will adapt, and companies will reconsider their approach. But the message is unmistakable. Tanzania is no longer a passive participant in the global economy. It is a nation that protects its people, empowers its businesses, and shapes its own destiny. In the grand narrative of global trade, Tanzania has emerged as a bold disruptor, rewriting the rules and redefining what it means to win. In a world where economic power often translates to political influence, Tanzania's decision serves as a masterclass in strategic sovereignty. It proves that emerging economies can, and will, assert control, protect their citizens, and chart their own paths. For the United States and multinational corporations, it is a lesson in humility and adaptation. For Tanzania, it is a moment of triumph, a turning point in a journey toward economic independence, national pride, and long-term prosperity. And as the cameras pan across the bustling markets, the roaring factories, and the energized citizens, one truth becomes clear. Tanzania is no longer following the rules set by others. It is making its own rules and winning big in the process.